Today, we saw stocks rallying up, come crashing lower, and finishing up near the upper portion of the range. However, is the Fed about to be forced to raise interest rates? Now, we come over and look at the fear and greed index. Right now, we're sitting at 32, and you see the previous close was 35. So there's a little bit more fear that actually creeped into the market today. And we come over and we start looking at the volatility index. We saw the VIX, you can see by the topping tail in this candle, was rallying up intraday. And here we go. Early on, the VIX was rocketing up, and you can see it close near the lower end of the range. Yesterday, we saw the VIX was up right around 10%, which indicated that today or tomorrow was likely going to be an update in the market. Now, when we look at how the indices fared across the board, the Dow was up 106 points. The NASDAQ was down 10 points. S&P 500 up 9 points. Russell 2000 down 1. We look at advancing issues versus declining. We had 59.8% of issues declining on the day. Then as we come over and look at the sectors, the laggards out there, technology, energy, utilities, and consumer services. The leaders out there, basic materials, healthcare, consumer defensives, and industrials. Now today, we see quantum computing stocks sink as NVIDIA CEO delivers reality check. Now yesterday, we saw NVIDIA absolutely getting destroyed. And if we look today, we saw NVIDIA come right back down towards the anchor VWAP and trying to get a little bit of a buying tail out there. NVIDIA, for all intents and purposes today, was only down 8 cents on the session. We take a look at Google. Google today was down $1.35. We take a look at Apple. Apple today was actually up 41 cents on the session. We look at Tesla. Tesla was up roughly 59 cents. Now, to put that in perspective, the stocks that were up weren't up by a large margin. And we look right here what the Fed has to say. Fed Waller backs more rate cut, says he doesn't think proposed Trump tariffs will spark inflation. And this is where the Fed's battle keeps going back and forth. Some Fed officials say the tariffs is going to cause massive inflation, watch out. Others are saying, hey, nothing to worry about, everything is fine. If we look at right here what this economist has to say, the Fed will be hiking rates by the summer. Now, let me know in the comment section down below, do you guys agree with this economist? Will the Fed be hiking rates once again by summertime? Because if we come over and look at the Fed watch tool, notice we only have 20 days until the next FOMC day. And we can see right now, the market is pricing in a 95% chance the Fed will not be cutting rates at the next FOMC meeting. Now, a question a lot of you guys have been asking, we've been talking about this during the live streams, which brings me to a good point. If you guys don't want to miss the next time I go live, make sure you're subscribed and you have the bell notifications turned on for all. But essentially, you're probably asking, is the stock market open tomorrow? Because we know the NYSE and the NASDAQ is going to be closed for the National Day of Mourning for ex-president Jimmy Carter. And if we come right over here to the CME group, if you trade the futures markets, U.S. equity markets will be open until 8:30 a.m. Central Time. So when you usually get the opening bell, guess what? The market will halt. It will reopen at 6 p.m. tomorrow night. So if you have any trading to do, you got Asia, you got London tonight, then come the opening bell tomorrow is basically going to be a closing bell, not an opening bell. Now, one of the big stories that we've been following essentially is the dollar, and more specifically, the strength of the US dollar. You can see today we have a little bit of a selling tail on top of the candle, but right above us, we have that ABC projection at about 110.13. Now, early on, we saw the 10-year yield rocketing once again, see a little bit of a selling tail, and we have a little bit of a shooting star type of candle forming. However, what's even more scary is for this pattern to complete, this larger ABC pattern, it completes right up here at just above 5% at 5.03. Now, if the yields are going to continue to rise, that's probably going to be problematic out here for the market. And more specifically, the Russell 2000 is looking sick. Notice we've had a third test coming down towards these lows. And we got to ask ourselves, is this part of a bear flag pattern that's likely going to go ahead and resolve a lot lower? As we look at the S&P 500, we've been monitoring this declining trend line. You see, we've had valid tests. We have not been able to get back over that level. And for right now, it looks like we are putting in a higher low. However, we're going to have to wait and see come Friday if indeed this low is going to hold. And Friday is going to be a big day. And the reason why I say Friday is going to be a big day, starting off at 8:30 a.m., we have the average hourly earnings. We have the non-farm employment change. We have the unemployment rate. Then at 10 a.m., we have preliminary consumer sentiment, followed by preliminary inflation expectations. So Friday's news is likely going to be a make or break for this lower level to see, do we either form a higher low like it looks like we may have in place now, or do we come down and essentially take that out? the MACD indicator is starting to firm up down here below the zero line. And when we come over here and start looking at the 4-hour chart, now, if you trade with prop firms like Apex, My Funded Futures, or Take Profit Trader, and you want a way to support the channel at no additional cost for yourself, make sure to use the links in the description box down below. And when we come over here and start looking at the 4-hour chart, notice the MACD indicator is trying to work its way up towards that zero line. We don't have a good separation, but they still have a bullish cross at this moment. As we come over and look at the 30-minute profiles, notice the MACD indicator is crossed back to the upside, and that is drastically different from this morning. This morning, we still did not see the MACD indicator firming up just yet. Now, you can see we closed right near value area high. Now, come Friday, if we get a bullish reaction from that news, let's not take our eyes off the prize. We have this minus development area up here, 594.57, up here to about 595.99. That is likely going to be a target location to the upside. However, if we start breaking back down below that level, then we really have the fear of coming right back down to the lows of this year. And if that level breaks, watch out, things could get extremely ugly. We come over real quick and look at the futures markets and look at the 4-hour chart. And we were talking about this a lot on the live stream. This red down candle right here, early on before the market opened, was looking like it was going to be a nice hammer candle. However, come lunchtime, we were able to flush down a little bit lower. And for all intents and purposes, we are still making a series of lower highs. High, lower high, lower high, potentially lower high here if we start to melt back down. Now, if you notice, we were able to take out value area low from last week. So we had the complete volume profile rotation down. Now, as long as we stay above 59.23.5, from a weekly perspective, we have a rotation on the way up. First target would be the point of control, which has already been taken out. The second target would be up here at 59.78, which we still have a little bit more on that trade. Now, if we get above 59.78 and the market turns back down, we would then have to switch back to be on the bear side of the trade. Coming over and look at the daily profiles real quick, we were unable to take out this point of control. Then I'm glad that I closed out those micros on the S&P 500 that we took today on the live stream. Now, as we look at this, you can see we had a lot of consolidation down here. And today it felt like we had accumulation near the lows. Now we're going to find out if that's going to be true or not. And the news on Friday is likely going to confirm or essentially break that thesis. However, I will be focused on 59.76. Maybe tonight, fingers crossed, we can even make it up and potentially take out that price point. As we look at the volume profile levels for the S&P, 59.61 will be value area high. The point of control will be down here at 59.50.75 with value area low coming in at 59.39 Now tonight, if we start breaking above that value area high and we come back down, I would then want to target today's point of control, then potentially value area low. However, if we can break value area high and stay above it, I then want to turn my focus towards that 59.76.75, that untested point of control that was left behind from the prior day. Now, as we come over and look at the QQQs real quick, similar to what we talked about with the S&P, we have this decline in trend line, and you can see this low that's in place as of today. And again, that could break on Friday, but right now it's looking like this could be a higher low, which would be constructive. And that could be a case where we start breaking back above this decline in trend line. If we can get back above that trend line, then we have a shot of running back towards the highs. However, the MACD indicator is not firming up yet on the daily chart. And when we start looking at the 4-hour chart, we do have the MACD indicator basically flatlined out here, meaning the MACD indicator is below the zero line and just basically flat. That the two lines are basically at the same price point. Then looking over here at the 30-minute chart, we have a slight MACD cross of the two lines, and it's going to be imperative. Can we get back above this area? Can we clear today's range or not? If so, we do have a minus development area above us, 521.88, up here to about 523.25. So if we get a favorable reaction to the news on Friday, this is going to be target locations I most certainly want to focus on. Now, when we come over and start looking at the 4-hour chart real quick, this is an area we talked about in the live stream. If we start seeing bullish price action, we kind of have this structure breakdown point. Candle wicks to the candle bodies, we sliced right through it. At some point, we should come back and revisit that level. However, the first target I want to focus on would be this high volume node, somewhere about 21,485.75. Notice today we were able to wick below value area low from the prior week. We came back above it. So similar to what we talked about with the S&P 500, we do have a volume profile rotation up. Next target would be near this high volume spike, which is very close to the weekly value area high. We start breaking above this area, then that's where that structure breakdown point comes into play. 21,644 up here to about 21,692. Now today, we finally started seeing crude oil get a little bit of a sell-off coming back down. And right now, this could be nothing more than an upper level consolidation. However, if we can get a little bit more retracement down at two key levels, the first one be about 72.38, right near these candle bodies over here, we breach that. Then I'm looking all the way down here to about 71.43. And we'll see, can we make it down there or not? If we just simply consolidate up at this level, that could be an upper level consolidation that will eventually resolve to the upside. So for the sakes of lower gas prices, let's see if we can get that pullback underway. Then today we come over and take a look at gold, the precious metal. Gold making a slightly new high out of this area. So we kind of have this little rise in channel for this little corrective move. And we're going to see if we start going substantially higher. Again, the 61.8 is about 26.98. We start breaching that, and especially if we breach the 78.6 at 27.25, we're probably going right back up towards the swing point here, then on our way up to making new all-time highs. But if we can start to turn from here, then we can set up another ABC pattern on the way down, which would essentially bring us down to about 2,514. Now, if you guys would like to learn how to trade the Tom DeMark 9-count sequence, make sure to watch this video right here.